Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, I don't know if you've heard, but we have an election coming up, a presidential election that is coming up in the next 30 days. So you might be wondering, the market's been pretty good, but what is going to happen to stocks after a Democrat wins or of course, the Republican might win? What happens to the stock market? So today we're going to look at a bit of history, specifically how the markets have performed in certain presidential cycles, and also what has happened to the market historically when a Democrat wins or a Republican wins. Because actually, I've been getting a number of questions from clients and folks. What do I think is going to happen to the market? Let's jump in and explore Democrats or Republicans. Which party is better for stock? So let's look at a bit of history. Here are all the presidents since 1961, starting with President Kennedy to Nixon to Ford to Carter and so forth. So you can see how the respective presidents did, meaning how the S&P 500 did in the specific term. So of course, starting with Kennedy, the markets were good. Johnson took over, the markets continued to take off. There was a bit of a pullback with Nixon, then Ford and Carter. And then we had Reaganomics leading into George H.W. Bush, and then Bill Clinton, which saw a lot of that tech boom in the mid to late 90s. And then we had the dot-com bust with President Bush, then Obama helped with the recovery, then President Trump, and recently we've had President Biden. So the markets over a long period of time have been good, but you could see how the market has performed with the respective presidents. So let's answer the question, Democrats or Republicans, which is better for the market? Historically speaking, a Democratic president has been better for stocks, particularly a Democratic president with a divided Congress. So look at that return. The average from 1950 to 2023, when we have a Democratic president and a divided Congress, is 15.72% compared to a Republican with a divided Congress, for example, 12.20%. So don't get mad at me if you're a Republican or, you think the market should historically have done better under Republican presidents. I'm just sharing with you the data because the data says what it says. To answer the question that I sort of posed earlier that I get a lot, my opinion is we're in a bull market. The markets will likely continue higher regardless of who wins. So if President Trump wins again, I think the market continues higher. I think if Kamala Harris wins, then I think the markets continue higher. Historically, Democratic presidents have done better for the equity markets. You might wonder why. Now, there's a lot of studies done on this stuff, but I just wanted to pull one data set, and this is from Bloomberg and TD Economics. The theory is that Democrats often take office in better economic times. So the study has been done from 1946 to this year. One of the data points suggests why the S&P 500 typically does better, generally because Democrats have taken office in better economic times. You might have a different opinion on this. Again, my job is just to share the data. So hopefully this clears up some thoughts that you might have, or maybe have some cash on the sideline and are not wanting to invest it because you want to wait on the election results. But I will stress to you, regardless of who wins, I want to make sure you focus on what's most important. You shouldn't be making your investment decisions on who the president happens to be or who controls the House of Congress. You can see either way over long term, the markets usually appreciate. The second thing is focus on your financial plan that's defined by your goals that you've built around your risk tolerance or retirement income situation. And in the context of the market, as I mentioned, how the president affects prices is just, quote, noise. So keep that in mind. Don't let the emotions or the headlines or the news feed, let's call it, distract you from what's important. Know your goals, get clarity on your goals, take action on your goals, focus on your financial plan. Don't get caught up in the noise around you, because what's going to happen is what's going to happen. And here's the reality. We can't control it anyway. So that's the reality. So all that to say, if you found value in this video, if you like this video, if you're getting this video on social media like Facebook or LinkedIn, go ahead and share it. Or if you're getting this in an email, go ahead and forward it to a friend. To that end, if you would like a second opinion on your portfolio or financial situation, this is our website at nicholswealth.com. You can go on our website, click on the upper right-hand tab, this request an appointment tab, fill out the information, and one of our advisors will reach out to you and answer your questions and provide you some clarity and some confidence in today's challenging economic environment. Thanks again for watching. Bye-bye.